let's understand and unpack all this. We have a very special guest with us, the co-founder and CEO of Moneyfront, Mohit Gang, joins us this morning. Mohit, good morning. Thank you for being here with us on News9. What's the mood on the market? One would have assumed that given the escalation that we saw over the weekend, markets may not have reacted as positively as what we are seeing on the screen this morning.
Morning, Kartik. Always a pleasure to be on your show. Look, honestly, yes, I would have anticipated and perhaps guessed that markets would open up in a somber note today morning, given that the West Asia escalation is now heading into fifth straight day, and without any indications or signs of abatement. It's a bit surprising, but I think perhaps I think markets not just in India but globally have taken this in stride, and maybe the markets have a sense that this is not getting escalated beyond Israel and Iran for the time being, right? And I think perhaps there are only two risk factors which emanate out of this entire escalation globally. Point number one is only if oil flares up dramatically. The oil has shot up about 10-13 odd percent from its last month's number, and it's trading at around 75 odd dollars. But yes, I think the severe flare up in oil is still not happening, and that would happen only if Iran were to perhaps announce some closure down on the Hormuz Strait, which I don't think so is coming. But yes, there is always a little chance or a little probability. But right now, I don't think so. The market is factoring that. So that's point number one. And point number two is I think perhaps market might react a little negatively globally if they think that this escalation will flare up much beyond and much larger, which means that perhaps US will get involved or maybe few other powers will get involved, so on and so forth, which doesn't look like right now. I think it is just a two-way street between Israel and Iran, and they will settle scores either ways within few days or perhaps a little longish time. And I think that's where it is. Right, so I think given the entire contour of this escalation, markets have taken it in stride. Though I don't think so. There is immediate big gain coming in from the market right now. The kind of situation we are in geopolitically, I don't think so. Markets have any reason to give you a big positive stride, and markets have all the reasons to give you a negative stride. So one has to be extremely cautious right now in trading and in positioning in the market.
All right. Well, of course, negative surprises cannot be ruled out at all from the market at this time. But Mohit, I'm looking at the energy stocks, I'm looking at oil stocks. And of course, this seems to be one sector which is directly benefiting from what we are seeing in West Asia by way of the conflict between Israel and Iran. In fact, oil India is up almost 1.5% in trade. ONGC is up about 0.8% or so. So is the story coming in from BPCL, HPCL, IOC. Most oil majors that we are seeing are up in trade, barring Reliance, which is also up, but just about marginally up, and the sort of reverse side of that being Coal India, which is down about 0.3%. So Mohit, I want to understand, for foreign investor, is this, given that one can with some degree of certainty assume that the worst of West Asia is not behind us as yet, is it a good time to be invested in oil stocks as a thematic pick?
Karthik, look, honestly, I think that's a very, very tricky call. Honestly, it's a very fast-moving and rapidly changing scenario. You never know which way the situation will work, whether it will favor the upstream companies or the downstream companies, and one has to be extremely nimble-footed if has to trade in the oil companies. It's not a bad bet, honestly. It's not a bad bet, but you never know. Sometimes what happens is government intervenes by hiking up excise duties and taking up the
Windfall
extra amount of.
taxes,
Yes,
right?
and bringing more taxes and taking up the extra amount of money which is lying on the table,
Right.
and the investors are left high and dry. And sometimes the market cools down if, let's say, the escalation were to stop. Yes, tomorrow suddenly there is some announcement of a ceasefire or something. The oil prices might immediately cool off, and again everything goes off in a jiffy. So one has to be extremely nimble-footed. Yes, it's not a bad trade to do, but one has to be very careful on this one.
All right. I'm also looking at some defense stocks this morning, because anytime there's a conflict, whether or not there's a direct involvement and a direct export window for defense stocks, that is a theme that gets picked up. And of course, HAL is up about 1.2%. Bharat Electronics is up about 1.75% in trade. Again, a call on defense stocks. This is one sector which has seen a sizable rally in the last few weeks. Mohit, is this a sector that you would be bullish on?
I think given the world in which we are living in, Karthik, one has to be a long-term bull on defense as a sector. Now, how much of that would you want to pay up in terms of multiples and premium is a call which I leave it to every individual. Honestly, these stocks are not cheap, but given the kind of geopolitical situation which all of us are living in, I think these are not bad bets to kind of go from with a fairly long-term view. And I also see a lot of mutual fund houses picking up a few of the the large cap defense names as their top picks last month. So I think there is this overall sentiment around the defense picks, wherein we see a daily news flow of new orders being given, new books, trade books, order books being executed, and some or the other news piece item out here and there, and that is what is fueling the rally. I just hope that retail investors are extremely cognizant of which names they are getting in and what
Okay.
multiples are they getting in, and that's the only risk which I see.
All right. And coming specifically to Adani Ports now, again, given all the news flow which is coming, even though Adani has denied that there hasn't been too much damage inflicted on the Haifa port, but given the fact that Adani is a sizable player in the entire shipping and ports business, where do you see Adani Ports, let's say, going from here? It has taken a bit of a beating. Stock is down about 0.6% or so. But if this conflict were to continue, then what's your bet on Adani Ports?
Look, no conflict will last forever, right? And I think Haifa port is towards the other end of Israel, though it's not out of strike range from any of the let's say arsenal which Iran would have. And it's always the ports and such economic zones or transport hubs are always like the most sought after targets in any kind of armed escalations. So from that perspective, yes, there is an iota of risk or there is an element of risk which is involved out here. But I don't think so. Haifa port alone kind of makes for that large an extent of the entire company or the entire stock. And we have had news coming in right from the CFO of Adani Ports that there has been no damages done to the ports so far. So my sense is I think there is no point of creating fear mongering out here. I think everything to me seems like status quo as of now. But yes, it's not again a time to go all out and play the stock.
All right, and I want to stay on the same chart for just a little bit longer and also talk to you about Indigo. So again, this is a stock which seems to be perhaps, it could be one of the cases where people prefer to fly Indigo as compared to Air India. At least that's a sentiment that one is anecdotally picking up right now, given the tragic accident that we saw in Ahmedabad last week. So the question really, Mohit, is that buy on dips is usually a preferred strategy. Indigo is down today. Is this a good time to get into Indigo, given that India's air traffic is not going to decline, but people may be looking for what they believe could be safer options to take to the skies? Is that a valid theory to go ahead and be bullish on Indigo?
Given the market which we have, wherein we only have two or three players, Rook, Indigo, SpiceJet to some extent, and then Air India or Vistara Air India combined, right? So there aren't many choices left for, and Akasa, sorry, there aren't many choices in Indian skies for available for investors in the listed market. Also, there are very few choices available, and given the market share dominance and given the control which Indigo has, and given the um, um, punctuality and given all the other factors which one attributes to Indigo, I think it's a decent bet. Only thing one has to be cognizant is that oil prices do negatively impact airline stocks. So I think that is something which will play out on these stocks perhaps, and one has to be aware of that. But otherwise, thinking that yes, there will be some market share which will move from Air India to Indigo, I don't think so, Kartik. That's a long-term play, honestly, from that perspective, because things get evened out. Every news gets played out for 2 3 days, a week, a month, and then I think everything normalizes to that extent. So my sense is that market share theory perhaps might not play out that.
Right, Mohit Gang there with his views this morning. Mohit, thank you so much. Always a pleasure having you here with us on News9, especially on a Monday morning.